Hey, and welcome back everybody to another true live scalping stream with the Mohawk Forex team. So we're back again today, and wow, the markets are doing some serious moves. As we know, we're based here in London, and obviously all the talk has been about cable reaching its all-time low yesterday at 103. It's back up a little bit today at 108. We've had a couple of wins on it. And these kind of moves, bad for the economy, but great for us true scalpers who like to get in, get out of the markets, take our profits and move on. But before we look at cable, we're going to be looking at this, as you can see on the chart here, the durable goods news that's coming up in about 10 minutes time. Look at your economic calendar, and it's a high impact news result, so we'll see what happens with this. And after that we'll have a quick look at the S&P Schiller Home Price Index, in case there's a move there bang on 30 minutes before the NY Open. Then we'll be trading the Open, and then we'll finish the day off with the consumer confidence report and the new home sales as well. And this is all a backdrop while we're looking at cable as well. So that's the situation on the 30 at the moment. We've had some nice signals, nice smooth signals actually. But I don't usually trade it in the London session. We've got our 5-minute and 1-minute charts set up with the news event, so we'll see what the news comes out in the next 10 minutes. Cable, like I say, we've taken a couple of nice trades on this today. There was the one of them, which was a nice sell. And we got, again, I went in just for 10 pips. Some people held on there for 20. We've got our line set up for our next move. And obviously, there's conflicting reports there. People say it's going to go down to parity, it's going to go below the dollar. Other people saying it's now pulling back. We're at 108. So again, it's still to the downside is the overall momentum of this with what's happening with the UK economy and the strength of the dollar. So, you know, we're not going to be looking for any big long-term buys on this, put it that way. Not at the moment, not unless the Bank of England look to get involved, and they're trying to not get involved, I think, till November to try and hike interest rates again. So we've drawn our line in the sand, which is our New York line here. Here's going to be our entry point, half an hour after the New York Open. And we'll see where price is. Now, if price is close to our NY line, obviously we do not take the trade. We want to see a big difference. The bigger the difference, the higher percentage we have of getting that 10 to 15 pips take profit. Like I say, I've got all these news events that are going to affect it as well. So we'll keep this on the background. US30 is our main shout. We'll also have a look at NAS. NAS, as you can see, is again top of our fib at the moment. A couple of nice signals we've had. RSI is green. ADX is below the 30 on the 1 minute, and we're kind of pulling to the middle of our bands. So we'll have a look at this as well on the Open. Again, you can choose, if you've got a smaller account, trading account, $1,000 and less, then I suggest trading NAS for the Open. If you've got more than $1,000, then switch to US30. And obviously you don't want to be scalping pound dollar or any currency pair on the Open due to spreads and commissions. And that's the same as gold as well. Gold can be done, but it's a lot harder. It's easier with the indices where you just get in the commissions on your entry and close. So, and the moves are easier to see, less fake outs. So we can have a look on US30, and you can just have a look at gold at the moment on the bands and here, and there was actually a nice sell here. Top of the bands, breaks back inside, and some aggressive traders, it touched there, so we could have gone for a bar here. So there was actually two decent trades on gold. That my entry would have been probably here. I would have gone to the center of the band, so 8 pips or so, 5-6 pips on gold for that move there, and on this one here it would have been, I'd have gone for 10. So you know, 15-16 pips already on 2 trades within an hour there on gold, so it's not looking too bad. If it was in a kind of a range here, there's another nice little win there, and it didn't break outside again, so yeah, there's another nice little win there. Again, I would have entered into there and have gone, could have got probably 5 pips on that. Again, on these trades, if you're just using a 1 minute, you want to be in and out. I'm not setting any kind of take profit level other than just 10 if it flashes that way, but I'm just literally getting in, getting green and getting out. If I'm combining it with a 5 minute chart, then you can hold a bit longer, obviously. So we're looking at US30. There we go. So we've got the durable goods news popping up in about 5 minutes time or so. I'll move that line up. There we go, so you can see. At the moment it looks like it's pulling back to the centre of the bands, which is an exponential moving average, so as you can see it can be a nice support level and resistance. But we'll see where the momentum takes this trade. It's the usual thing as well. This is pre-open, so I'm expected a reversal. So if we get a way better than expected result, we're looking for sales, and vice versa. That's majority of the time, but obviously I will see the result and see how the market moves first. But yeah, if it's a good news, we could see a sell down here, down to our bottom band. It'd be interesting to watch. So I'm just going to take this line out now as we're getting close, and I'm going to log in to the broker. So we're logged in, and we're going to be using the smallest lot size. So again, it's just 1 on IC markets, which is 10 cents a pip. A margin of $140 required to make sure you're not kind of stopped out by your account. So that's why I recommend $1,000 and above, so you can enter a few multiple trades and trade your way out of a bad trade to break even. Now remember to hit the like button and subscribe, and also if you want more information on joining us, then you go to the website www.mohawkforex.com, and we'll plug into Bloomberg because they might announce the news, they might not. Even though it's high impact, it's probably not on their radar this morning. Things like Credit Suisse looking bad. And like I say, cable as well holding at the moment. Indexes all futures looking to the downside, so we'll see. But so we're just focused on this news event, in and out, grabbing some green.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
When you think space, you probably think one space agency that travels under the radar is ESA.
So we've got 10 seconds. Here we go. Good luck, everybody. Let's see what the result is. Let's see if we can get our first trades of the US session away.
We've collaborated with pretty much everybody who is involved in space exploration.
The ESA wants to be a leading force in furthering humanity's mission
You can see
into space.
we've got a sell signal on the main chart.
Successful human missions
Our scalping chart, we're pushing up.
have to learn to live and work off-world in a different way.
Better than expected.
The place where we are going to learn to do that is on the moon.
Let's see what we're going to get.
Can ESA help humanity take its next
Let's see if it's going to push up and back down again. Brilliant, and we're done. There we go, and it's that little push up there. We managed to get quite good actually. The broker, it actually let me do 1, 2, 3, 4, 5, 6 trades, and we got 10, 20, 30, about $35 there in what, 10 seconds. So that will do nicely. Here's a nice little start.
You need top analysts to bring you exclusive global insight into cross-asset markets.
Now, is it going to pull back? Let's just check that news result.
Bloomberg Markets, the close.
Like I say, month on month it was better than expected, as expected, and then with X Defense it was worse. So a bit of a mixed bag, hence why we got the push up, and we probably might get a drop down now. Let's have a quick look. Let's just watch that 1 minute. I'm just looking at the top of the Fibonacci here, look as well.
Close for 2022 with the close yesterday on the S&P 500. We bounced right back off them. On the S&P, we bounced back by 1.3%. On the NASDAQ 100, up by 1.55. Yields are lower than negative 11 basis points.
Let's see if Bloomberg say anything about this.
The dollar's weaker in line with that. The euro stronger. Euro dollar 96.37, positive a third of 1%. Sterling big turnaround, 103.50. Yesterday morning, all-time low on cable, back to 107.94, and at one point through 109. That currency pair positive about 1% this morning. George Saravelos of Deutsche Bank done some fascinating work over the last week on this. This
Wait
is
and
what he
see
said
if we
was
can
most
get any more
recently.
trades on
What is
this.
the clearing level of UK asset prices, gilt specifically, at which investors would be willing to fund the UK? Of
Nice
course, this is
rejection.
the critical question, and most people would agree with him. He said the market is itself already attempting to answer.
Yay, brilliant, brilliant. We just got out there on that little push down on the 1 minute time frame, and that was good. We managed to get another 1, 2, 3, 4, 5 trades, and that'll do. I do 2 blocks of 5 trades, and that is me done. And that was another 10, 20, 30, that was $40. So we're up about $56, $60, $65 there in literally 2 minutes of trading. So that is why I like true scalping, no messing around. There you go, nice and easy.
Strategist at Credit Suisse this morning. Shab, I want to go to where Mark McCormick over at TD wrote up a great note off their London desk yesterday. I know you've studied this as well, which is a nation's flows is signaled by the current account balance. And there's all this mumbo jumbo in FX, mumbo jumbo in financial TV and radio and all that, which ignores the obligations a nation has given flows. How
So that's what we'll put down as the result there, look.
On the state of the current account balances in the United Kingdom.
I think they made assumptions that the market would like the policy mix that they're putting forward.
Beautiful, and that's put us just about 20% up on our account for the day, so we're
Had a current account deficit that
pretty
was
happy about that.
8% of GDP.
Stunning.
If you add to that,
And that's before we get stuck into the open. So
going to double digits.
again, with these news events, when they're kind of a mixed bag, you just look for the one direction, then the reversal, then leave it alone. It is dangerous then when we're in the mid of our bands. I know we're top of the fib and we're looking to try and take some sells down to that 0.5, but RSI is green and staying above our zone, so I'm not interested in taking any more sells. I don't want to take any more buys because we're reaching a level of resistance at the top. This could go to the bands all the way to the outside and then pull back down. So that's US30 done until the next news, which is the we'll try and have a look and see if we get a move on this in 25 minutes time as well.
This is now a very pressing issue. I think the market clearly
But that was a good, nice little news event. Nothing major. Say Bloomberg haven't mentioned it.
Delivered. So the market understands that. I don't think the UK government has prepared the UK public for that. The messaging there is different. Now, maybe at some point we're going to square the circle. I assume the UK government will have to come out with plans that involve some form of fiscal tightening in the medium term. Some areas of the economy will need to see tightness on that front. That might not be popular either. So we'll have to see how that works out. But it's going to be a rough couple of months, I think, for the
Shahab,
government.
one thing we've said on this program is to really draw a distinction between an adjustment, a market adjustment, through a weaker pound sterling, higher gilt yields, to attract capital to fund deficit, and something much, much worse than that, a negative self-fulfilling downward spiral in the currency, an upward spiral in the gilt yield. Is it the former or the latter? Because I'm not sure many people are on board with the idea just yet that it is a crisis of the latter, and perhaps it's just the former, that we've got to that clearing price, we needed a weaker pound, much higher gilt yields, and here we are.
Well, I think the problem is really the Bank of England's base rate is still not very high relative to what the market needs to see. And the problem is the Bank of England has consistently failed to meet what the market has priced in for where rates should be in the UK, even before the government announced these latest fiscal measures. So the track record is not good there. And when you compare that to other central banks, for example, let's take the SNB, where they got well ahead of the game very quickly.
Cable still raging around our New York line, and again centre band not breaking any really levels for any kind of major pullback, so it's been ranging within our zone here. So again, not interested in that because we want to see big sweeping moves on the pound dollar on smaller time frames to get those pips. So
and it puts the UK in a bad light, in my
That raises a really important question then. If there is a bigger credibility deficit right now,
say that was a nice
in Westminster
cheeky
or in the
sell
city,
on US30. Could have an aggressive one here, but usually I would have taken that sell here down to towards the centre of the band.
Credibility problem in terms of where financial markets stand, and they both have this problem, certainly with respect to competitor nations that are also looking for capital. So trying to keep UK capital in the UK could become the next problem, let alone trying to attract foreign capital into the UK. So I think the Bank of England needs to signal very clearly that it's prepared to take rates well above Fed funds rate, for example, in the US. And that needs to come soon. I don't think we have a lot of time to wait for this to come through. And waiting around till November is definitely a high-risk game.
So what's your conviction level in terms of levels, in terms of where the pound can weaken to before something steps in that's a little bit more crisis-like and a little bit less market discovery of new levels?
Well, I think somehow the Bank of England did buy time with its statement yesterday, suggesting that it's prepared to act as needed. I still have my doubts about whether really we can wait till November for the bank to act, and November 23rd for the Chancellor to come up with a medium-term fiscal plan. I assume we'll see in the weeks to come some form of early insight into what kind of plans the government has to reassure the city, to reassure financial markets. But I think the path of least resistance is a move back down to the record lows that we set yesterday, and unless something changes very quickly.
And how much is this a UK story? How much is this a dollar story? And it's an important question because a lot of people have been saying this is the final throes of the dollar ascendance and that we're going to see some sort of washout and then a bit of a retracement. Do you buy into that?
I don't think it's just a dollar story because the pound is weak against a whole range of currencies at the moment. So even against the euro, the pound is weak, as Tom mentioned, on a trade-weighted basis. Sterling is down. So there's clearly some.
It's very interesting. It's going to be interesting to see what happens. Is it going to go to 1-to-1 pound dollar?
It's very difficult to pin this down on just general dollar strength.
Where's the trade in the Pacific Rim right now? Where's the opportunity to make a big figure move north-south Pacific Rim?
We're still looking for dollar gains against the Chinese currency, for example, against the renminbi.
Really?
We're still looking for dollar Korea to go up.
You're 750?
We're looking for 725 as the next step in that currency pair. We've been consistently bullish dollars against the renminbi.
Is that destabilizing for Beijing, or is it a fiction where they really don't care? They don't care about Dornbusch or anybody else?
I think at the moment there's a sense that because the Chinese economy is not doing so well, because of the zero COVID policy and other issues as well, and because the dollar is strong globally, there's a tolerance for the Chinese renminbi weakening without necessarily creating a sense of panic.
Sharp, just quickly, BMO, Stephen Gallo said we've seen the low of the year potentially in cable, 103.50. Do you think we have? It's the low in?
I think we can go lower than that, to be honest with you, unless something changes on policy. I do believe that it's very, very important now, especially from the Bank of England's perspective, to come in and reassure markets that interest rates will go to where they need to be to make the overall metrics work out in terms of the balance of payments and in terms of attracting net capital inflows into the UK. Unless that happens, I do think we can go through the lows of the year.
November 3rd, the next scheduled meeting for the Bank of England. I was very precise with my words then for a reason, the next scheduled meeting for the Bank of England, because, Lisa, some people think maybe they meet before that. Shahab Jalanous there of Credit Suisse. The Chancellor met with asset management and insurance firms in the City of London today. Just got a tweet from the Treasury in the UK. He met them and reiterated, Lisa, the government's commitment to fiscal sustainability. Next month he will set out a package of regulatory reforms for the UK's financial services sector to drive growth and incentivise investment. One thing that's got lost in a lot of the conversation about what the UK government has done over the last couple of weeks, and rightfully so, we've focused on what's happened in the markets, but also prioritising the city and financial services in the UK is for a very good reason. It makes up a large chunk of the UK economy, Lisa, and it's certainly not a bad thing that we're focusing on supporting that.
And Bob Diamond was pretty adamant about this, that there's some really good aspects to some of their growth plans that will support the sustainability of the nation. It's just, do they have the time to wait to set out those proposals as pound falls out of bed? I don't know.
And will the market cooperate more broadly to the bond market too? Can I share my lineup with you for the next hour?
Please do.
Around the opening bout, Mike Wilson of Morgan Stanley. Looking forward to that. The man has been right for much of this year. We'll break down this equity market with him at 9:30 Eastern time. Going into that, we're going to catch up with Judy Beale of Kane Anderson Rudnick and Luke Hickmore of, how do you say Aberdeen, Tom? Without the vowels. Do that again. Aberdeen. Anyway, we'll catch up with Luke if he still wants to join us in 20 minutes. A man who's got to manage, Lisa, sterling denominated assets, so that's an important conversation.
Well, can I just bring this to you? There was a story today on Bloomberg talking about how electric blankets, that the sales of them are surging in the United Kingdom ahead of the winter.
That's no joke, is it?
It's no joke, and that the prices are skyrocketing because people are preparing for less heat and saving money on those bills.
We can joke about some of these moves, but that is no joke. And Europe's going to have a very difficult winter too. And one thing we've also got to talk about as well, Lisa, is just the bear case becoming a base case in Europe, to see Nord Stream 1 down and no hope from some people that it comes back online.
Which is the reason why perhaps there isn't necessarily conviction in a currency call, because how do you have conviction in how this is going to play out?
The weather.
I want you to watch.
Is that Bloomberg surveillance without the vowels?
It is. You know, just we hired a marketing
Did we ever
team.
get an explanation from Aberdeen on that? Why did Aberdeen do that?
What's that GIF about, you know, like, hey kids, how's it going?
Chart banners in the control room going, Tom misspelled it. No, it was our consultants.
A marketing consultant said drop the vowels. Drop the vowels for Gen Z. It's kind of insulting to Gen Z, isn't it?
Just
drop the vowels from everything. You know, it's great marketing. Great marketing. Futures are positive from New York. This is Bloomberg.
Cool, and we've got 15 minutes till the next news.
News from around the world with the first word. I'm Lisa Mateo. Hurricane Ian has now turned into a powerful Category 3 storm as it takes aim at Florida. Ian made landfall in Cuba early.
Yes, we're looking at the Schiller Homes, see if we do get a move on US30 again. Maybe, maybe not.
Hurricane conditions could arrive in Florida Wednesday
And
morning.
there's some speeches, but we've got the NY Open, and then our final trades will be the homes and the consumer confidence. And then tonight in the group we'll be trading the API oil news as well, which has been really successful for us over the last few weeks.
Higher than today's price, but below its previous forecast of 125. Senate Democrats have proposed a short-term funding bill aimed at averting a government shutdown. Congress must pass a measure by midnight Friday, but the package includes a measure to speed up energy permits that's opposed by most Republicans and some Democrats. Leaders of both parties are anxious to avoid a shutdown in a little more than a month before midterm elections. 1,000 fast food workers at San Francisco International Airport have gone on strike for higher wages. And they're telling travelers to bring their own food so they don't have to cross a picket line. The head of the Unite Here Local 2 union says most of the workers have not gotten a raise in 3 years. The airport's not commenting. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Is spread betting right for me? Get more.
Lisa Mateo, this is Bloomberg.
Nice push up. So the durable goods really was a range. It really just like sold off. There's a little buy on it, and then the quick sell off, and then it's pushed back, and that's it, back to normal. And like I say, it's pushed up to these levels. Top of the band, we're really high on the fib. RSI still got room to go. Overall, we're still down, as you can see on our bigger trend. We have got a buy signal now, and that buy signal is valid, because you can usually, when the buy signals stick, I can measure, and then usually we look at the 1 minute and see where the candles are, and they're above the zone, so that could have been a nice little buy to the top. Let's see if this pushes up to the top of the bands, or whether it's going to pull back, who knows. Let's watch and see. Like I say, we're just in a, it's against the trend at the moment on our trend bar. But looking good, pushing. If you're going to set it, you could set it to see if it's going to do it from here.
Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16.
So put a line in for the open.
Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish, and complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out.
So we've got about 10 minutes to go till we see if we can get another trade away on this news event. Cable still hanging around the center in our line, still, as we're saying, still just dipping around, keeping around that 108 level, 179 to 108. Doesn't really change. In Asian session it was 1077, and it's just up 3 cents. Peaked at 182, 10 cents, 9 cents, and it's back down again. So it's just this, when you see all these signals that are out, you know it's a range and to avoid trading it unless there's some major news event. Like I say, we've got our line here in price, it's hugging it rather than moving away from it. So at the moment we've still got another hour before we trade it. So if it's too close, we don't, we'll just leave it for tomorrow. So it would have been a nice win there. Look, you could have got 10, 132, you'd have got 10 pips on that. It's weird how the buy signal disappeared. Weird. Thought it would have stuck. But there was a winner for 10. If she was aggressive, I mean, like I say, I'm just waiting for the next event now. coffee, sitting on your hands. That's the safest way to trade.
Someone I listened to carefully, Loretta Mester, with that question, the mathematician of all of the Fed talent, the Cleveland Fed president, is just exquisite.
9 minutes to go.
Dynamic she displays in her English prose. Lisa Bramwitz and Tom Keene. And what we're going to do here is a little different. We're not doing like the weather doom and gloom, although Lisa, come on. You in the big, like the boots and the yellow rain thing, standing in the surf of Florida. I think I could see it.
Are you trying to send me down to the hurricane in Florida? Sure, Tom. I'll be your correspondent. We're going to do this a little different now. We do this with Brian K. Sullivan, who owns a high ground on weather and business for Bloomberg. He has been dedicated for years in following this. What gets my attention of Ian, Brian, is 45 miles an hour and suddenly 125, category 3. Can this gain ever more momentum to Florida?
Yeah, exactly. Intensively rapidifying, and it's going across the very flat part of Cuba right now, and it's going to head into the Gulf of Mexico, get some warm water, build up even stronger, and I think in the next couple hours we can see it crack category 4.
One of the things, and Lisa mentioned this on the break here, is every single guest on Bloomberg Surveillance has bought something down in Florida. I mean, they're all on the coast. There are all these beautiful condos. Has there been any change over the years to the coastline real estate that is affected by these historic storms? They haven't moved back from the shoreline, have they?
No, they haven't. And in this case, that part of Florida doesn't always get hit. So there's been a lot of kind of whistling in the dark, and the idea that, oh, it never happened to us before, so it's not going to happen now. I mean, you have to go back probably to 1921 to get a storm of this strength and this power coming into that.
Wait, you're serious? We have to go back to Humphrey Bogart and I think it was Lauren Bacall in that hurricane movie?
Yeah, Key West, right? Or
Key West. Are you kidding?
Yeah.
Wow.
Yeah, that's one big concern that people have as they watch the development of Hurricane Ian, especially hitting some of these areas that have been built up. And Brian, how much would the damage potentially be if they got a hurricane akin to what we saw in 1921, which some people think is the last analog?
So if it hits exactly right, you're talking $60 to $70 billion worth of damage throughout Tampa Bay.
Wow. So at this point, how do people kind of prepare for this, and longer term, what does it mean in terms of development, in terms with recognition of whether this is going to become a more frequent event? Is it?
Well, I think at this point, all you can do is get out of the way. I mean, it's too late. But in terms of the long term, this is a conversation the entire United States has to have about what we build right along the waterfront and how much money we put. We're seeing this in Boston, we're seeing this in Miami, we're seeing this in Norfolk, Virginia, all over.
Right. Brian, Tampa is just one example. A major shout out to Jeffrey Vinnick, ex-Fidelity, who did so much for Tampa along with others. A boom economy. There's going to be a compare and contrast with the heartbreak of San Juan. I mean, there's no question about it. What does Tampa have to do to not have some of the sadnesses that were observed in San Juan in recent weeks?
I think in some part, the infrastructure on the mainland is a little more robust than the infrastructure on Puerto Rico. So, at that point, you're dealing with the resources of the entire country, and they should be going to Puerto Rico as well. But I think it's mainly a question of infrastructure and how quick you can bounce back. So, the grid on the mainland is a little more robust. The transportation system on the mainland is a little more robust, and it's just easier to get materials into South Florida than it is to put them on a boat and send them to Puerto Rico.
Brian, can you give us a sense of the trajectory for the rest of this season, this hurricane season? Are there other forms brewing? Do you get the sense that this is going to be an exceptionally active one, or just par for the course?
Well, the season forecast was for it to be above average, and it was very quiet through August, but now it's kind of picking up speed as we're heading to September here. The other interesting thing is the Western Pacific. Vietnam is going to get hit today.
About 6 minutes to go.
Storm. Japan has been hit by a few.
Just enjoying my coffee, sitting, watching. 5 minutes to 6 minutes to go. See if we get a move on this.
Brian, thank you so much. Brian K. Sullivan with us on a storm that we've underplayed in the Northeast, but which is very serious.
Nice pullback on US30 as well, so it extends to our bands. So yeah, sell signal as well. That sell signal was confirmed. Look, sell signal was spot on. He took the sell signal.
Caught the violence.
There's the buy.
Well, and it comes at a time when a lot of people have moved
Oh yeah,
to Florida.
perfect.
Florida has
Entered as soon as that candle would have broke the center line and scalped and taken profit there.
These financial centers,
Perfect.
and there were stories about it today about how they're all shutting down in preparation for the hurricane. How does weather deal with some of the immigration that they have seen and the buildup that you've rightly pointed out, Tom, especially on the shorelines? That's going to have to be an increasing question and pressure, although, you know, to date, we haven't really had to deal with it, at least post-pandemic.
Yeah. David Kotak, who is always a good friend of the program, is living this in Florida.
So I'm logged in again, yeah.
It is too late for Tampa to do anything for Ian except evacuation. They have, in the words of Mr. Kotak, writing cryptically, they've just simply avoided a lot of the efforts that were required after what we saw with the hurricane of the century here. I think it was in 1995. Lisa, let's go over the data. It's a better tone today as we go to Conviction Wednesday. Tomorrow, I'm looking at the real yield, 1.50%. A little better than the fear of yesterday.
Well, the fear, can we just talk about that fear? Just because I like to do that, but also because we're looking at a real yield on the 10-year Treasury that went up past 1.6%. This was a pain point. I was speaking with a number of strategists who were talking about how that would be kind of the breaking point for markets. Well, we got there, and markets didn't break. So what does that mean? Where is the threshold at a time where people have gotten used to zero real yields for so many years?
On the Bloomberg terminal, folks, you can do the math. You can see the data, and the data of 04, 05, 06 is some form of moving average of about 2.05%. Lisa, I don't hear people really modeling out 2.05%, except Bill Dudley and a few other select.
Exactly, and I was speaking with Michael Schumacher at Wells Fargo, and he said to me, you know, I raised the point of what about 3% real yields, like what we used to see, and he said, "Ugh, that scares me. No, that's impossible. 1.5% is it." And he's not alone. Most people agree with him.
Okay, I'm going to get up from the surveillance nap with Vet Bill and Kennel Fee, and we're going to observe the auction. What am I looking forward to this afternoon, Lisa?
How much demand there is? Is it a successful, orderly auction? Are people excited about the yield that they're getting? Which is the
nice US30 pulling down into our zone.
It's just like poetry, folks. I mean, never have I heard such an interesting, nuanced discussion. Maybe I'll sleep through it, Lisa. That would be just as well.
Well, you know.
Futures up 46 down.
What is the main reason institutional investors give you for not adopting crypto?
There's still a lot of regulatory uncertainty. The U.S. has been not good at making things clear. What's a security, what's not a security.
Now futures up 279. The VIX 30.95. Stay with us. This is Bloomberg.
Looking good. 1 minute to go. Get ready. Let's see. I wonder if we're going to get a nice move on this. We're into our golden zone, which is what I said we're looking for the sell. Gone back to that. We've already 20 pips up. So this is kind of a bonus trade if it comes off. Wonder if we're going to bounce off the 5 fib and maybe we can get 5-10 pips. Yeah, it's easy doable. Just depends what the news is going to be, if it's going to make it move or not. So there we go, countdown. Right, I'm logged in. Good luck, everybody.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming had been that venue for blockchain enterprise, for crypto. It's not the Wyoming way to sit around and wait for
Make sure we're logged in. Yeah, cool. Let's see. Any movement price action yet? No. 1 minute looking lower. It's going to extend outside the bands probably. Hitting at 0.5 support zone.
This trend is coming.
Let's
It's not
see.
going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Worse than expected. Let's put that in there. So let's see if we can take a buy. Let's have a look.
Somebody says, I want to be a person has an impact on society. What would you recommend that somebody do to work their way up?
Well, I think.
Hey, we're done. Brilliant. We caught it.
In something.
Caught it just nicely there. And that was a good win actually. We've got 5 positions away. All done in 44 seconds, and we got 10, 20, 30, 40, 50. That's brilliant. We've got £50. We've got $65 on that. A little buy on the news. Got in, got out before it dropped. I mean, the sort of sell there, beautiful.
To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Turnaround Tuesday. Will it stick? Live from New York City this morning. Good morning, good morning. For our audience worldwide, there's the bounce. The countdown to the open starts right now.
Now let's see if we're going to get any buys. Got a little flash buy, took the sells. Now let's see. We're outside the band, so we're looking for a pullback into the zone, so we'll just wait on this. We broke below the 0.5, so we could be going lower still, but we'll wait for a candle to finish inside our bands. That's good. That was a nice win on that news.
The past 2 weeks it's been ugly. There's been no place to hide. Stocks keep going down. It's painful and horrible.
Cash is king.
Whether it's fixed income, equities, commodities, currencies.
The unfortunate reality is everywhere is a pain trader.
It's going to hit that 6.8. Yeah, look at that. Beautiful.
This is a hard market.
The rates seem to be driving the bus.
You've got to take the Fed at its face value. There's a very rapid shift in financial conditions.
If anything, we're looking for.
It's going to find a level
It's a bit late to be going under
of support.
aggregate level.
Use some of
You can see round about here, there's a line in the sand there, look. 1, 2, 3.
Everybody's trying to read between the lines.
Joining us now is Julie Buller, Kane Anderson, Rudnick, and Aberdeen's Luke Hickmore. Julie, I wanted to come straight to you. A new
Open is up next. We've got 27 minutes. Tried to push. Tried. Look at that rejection. Rejection, pushed up. Is this next one going to be it? We're hitting that 6.8 on the Fibonacci, as you can see here. Look.
It's a good time to be upgrading the quality of your portfolio. So if you have any losers that you've just been holding on to, waiting.
Beautiful sell. As soon as we get the combination of a signal, a trend bar, and RSI red, that's your entry for a sell. That's the most perfect entry we can get with the highest win rate when you get all these synced together. So a nice sell. We scalped that news as well. Now we're just waiting for it to bottom and see if we get a push back into our centre of our bands.
26 basis points at 480. Is that a basket case or a monster opportunity?
It's still a basket case. I think the problem is starting to now be LDI accounts are having to meet massive calls for collateral. We're seeing some big selling around that. We've got a massive syndication coming in tomorrow as well.
Remember, we're going to be going against the trend if we are taking buys on this, remember.
Corporates today, and from what we're hearing, not doing very well with that. No, I wouldn't go chasing the 30-year UK at all.
Should you chase the front end? In America, the 2-year right now, 425, and most people say Yes. And Julie, I wonder, we've repriced terminal rates in an aggressive way that's pushed up the front end of yield curves all around the world. I'm trying to work out whether you think that's something that's going to stay with us for a while. We need to get used to that. We need to be pricing off 4% for a long, long time.
Yeah, I think we have to, right? Because if you look at the persistent drivers of inflation, they're pretty long-term and sticky in nature. So I don't think they're going to be lifted anytime
Dropping
soon.
still. Going to say you don't want to be taking sells now because we're going to be hitting the 618. If it breaks that and we're going lower, then yep, you can sell. But at the moment, you want to be holding, sitting on your hands again, waiting. So we're 23% up on the account today, so we don't want to give anything back.
Yields on a 10-year yesterday closed at the highest level since 2010, coming back in just a bit on a 10-year.
As you can see, look, 618's hit now.
Kelly Lines has more. Hey, Kaylee.
Four straight red candles broke.
In the bond market. True here in the U.S. with the biggest upward move on the 10-year Treasury yield going back to March of 2020, but true across the pond as well with a 100 basis point move in just 2 days on the 2-year gilt yield between Friday and Monday. And of course, we saw it drop like a stone earlier today, down as much as 37 basis points. Now it's only down about 9 basis points. So it really speaks to the volatility we are seeing in the bond market, not just in recent days, but really on the year thus far. Just take a look at the move we have seen in 2022 for the 10-year Treasury yield. We are up more than 220 basis points. That is a record for any year, going all the way back through at least 1962, as the market has dramatically repriced the tightening expected from the Federal Reserve and central banks around the world. And that, of course, in turn has weighed on stocks, especially higher valuation ones that are more sensitive to higher borrowing costs. So collectively, when you combine the loss in market value of the Bloomberg Global Aggregate Bond Index and the MSCI World Index of Stocks, we have seen a drop of $29 trillion since the peak in November of last year. Absolutely brutal across asset classes as the market braces for a potential global recession, which Ned Javis Research now has about a 98%
bounced off the 618.
That extends to foreign exchange as well. We have seen the dollar strengthen.
So you've always got to wait for that candle to finish, you see. Some people might have nipped in and been aggressive on the sell, and now you're going to get bit in the ass, you see. So just wait for the candle to finish below the 618 and below, then you can jump in. At the moment it's just rejected off it nicely, look. But we're going to push back into our bands. Take a buy. We'll try and get in and out. Just waiting for the next setup. See if we can get one more trade before the open. Then we'll trade the open, and then we'll be trading the consumer confidence and new home sales news, and then we're done. That is it. And that's how it should be. You know, you're talking 90 minutes a day trading, you know, maybe a couple of hours if you want to do like we do the London Open.
That indicates awareness of macro and FCI spillovers and guards against overkill. Luke Hickmore, can I throw that at you? Is anything about what we've seen in the last week disorderly in your point of view?
I think actually probably not. Some of the liquidity is definitely hard to access in the gilt market, which, you know, is starting to get towards a disorderly market, but it's still doable. People are still executing. You know, we're clearing levels at higher yields, and the market's reacting pretty logically to what was an absolute shocking budget last Friday, and pushing fiscal when you're pulling in monetary just is really, really hard to achieve. So, no, I don't think this is disorderly. I think this is a sensible repricing. It's perhaps gone too far, and certainly the front end has gone too far, but not disorderly.
Look, that's the important point. A readjustment.
Trying to push up, trying to push back, look. 13 seconds to go on this candle.
Different to a self-fulfilling negative downward spiral in either the currency or upward spiral in gilt yields. What I hear from you is that you think it's the former and not the latter.
Yeah, I think that's absolutely right. And, you know, a
Let's
lot
see if
of
we can
currency
jump in.
crises, and this is what it's been, usually end up into a much improved.
Yeah, we've done it. Brilliant. We got in on that. Nice reversal. We managed to get another $20.
We've had in the UK for a long time. Rebalance the economy, push up to more sensible levels of yield and borrowing rates we've had for the last 10 to 15 years.
We'll catch up with Guy Johnson on this in about 10 minutes' time. Looking forward to that conversation. Also need to get up to speed on what you're hearing from the south side. JP Morgan's Marko Kolanovic speaking yesterday, writing this note, saying the following. rising risk that Fed engineers a recession by intent or accident, goes on to say, while we remain confident that a softening in labour markets and core inflation is in the pipeline.
Again, we're just going for green on these reversals because we're going against the trend, as you can see. Look, pulling back down. Again, if this candle bottoms out and goes green again, we can get back in on the buy. And we're looking at the 5 minute, you see, pushing up.
Conditions for a market bottom are falling into place. Stocks are looking increasingly cheap and approaching deep value outside of the US, and positioning is extremely depressed. Intriguing that the equity market boards are now talking about limited downside and not tons of upside, but we'll let that stay there for now. Julie, I want your opinion on this. This idea that some preconditions for a market bottom are falling into place. Did any of that resonate with you?
Yeah, I mean, we're starting to get there. At least now, you know, sentiment is starting to get very depressed, but valuations are also starting to look better and better. And so, you know, every day that we have really gloomy, emotional markets is the day that we're getting closer to a recovery. So I think it's positive. I think there's more realism. There's more understanding.
Nice fight going on. Look, you can see on that 1 minute candle.
Impossible to really navigate when you've
this candle is going to hit. Is it going to hit the 0.5 on the Fibonacci?
It's not possible to engineer this with inflation this high. And so that realism is a positive thing. The thing is that you know, we still kind of have a long way to go in terms of a possible correction. It's not like markets are cheap. They're cheaper. And I think that's an important distinction, and valuation is really important right now to be thoughtful about.
Julie, one thing that strikes me is that we've played this Fed pivot story maybe 4 or 5 times through the summer.
Brilliant.
Already,
And we're done again. Yay.
The one thing that really,
and we've got another
bugs me,
$15 on that.
This idea that a Fed pause would be
another nice little win and push up. Let's see if it pushes up again.
Fed pause. And I don't think,
like I say, usually if you're scalper wants to hold, then obviously you're going to be setting a level there, you're going to be setting a level below here, and you're going to be looking at that as your potential level.
Judy, do you think we're ready for that?
Yeah, I think that's exactly right.
Pushing up 0.5.
The reason for the pause is that the economics have deteriorated significantly enough, and they're nervous about moving forward either direction, right? Because we don't want a repeat of the 1970s. We don't want to keep doing this again. But there's going to be no dry powder to support the U.S. consumer or really anyone. So we just kind of have to let it play out naturally on its own, which we probably should have done more of anyway in the last 10, 20 years. I think
2 minutes 44 on this candle here to see if it finishes above. Or it's on the resistance of the 5.
You could see equity markets do better even if the economy is still struggling. That's typically how it plays out.
Luke, do you think we're ready for it?
I think we have been moving at an enormous pace, coming out of COVID, dealing with the Russian invasion, coming through this year and inflation shocks. The pace of the economic cycle is one that I think people are underestimating enormously. And it's quick, it's fast, and we could still see, and I realise I'm hanging on to threads, a pause from the Fed as we get into a recession quicker than
yeah, we've got some more there, right? We managed to get another 5. We've got another 3, 6, 9, 10, another $15 there as well.
If that's the case.
This is what it's all about, just a little bit of scalping in and out, getting the green, taking your profit, moving on, not holding. For the holders, that's your setup. For people like me, it's like to get green, get out. That's what I'm doing. That's a good 15 positions taken. And now we can wait for the we're 50 minutes away from the open, so yeah, that's it. And we're 27% up now for the day, so we're really doing well. Only a couple of reds where the broker didn't complete my trades in time, execute. Apart from that, we're all good. Looking on the 5 minutes, I mean, we're still a downtrend, we're also still red, but we're looking where we're on the fib, pushing up. Again on this, 29 pips, so I would already be done at 10. Watching if the ADX crosses that 30, then you want to be out of the trade. And just take whatever you've got, pushing up nicely. And you can see on the 5 minute just pushing up, trying to get to that 0382 on the fib.
Have you seen from
so now I'd probably be out of the trade. I probably wouldn't hold any longer now. You've seen 2 rejection candles. ADX is going to hit that 30 line. Oh, it's gone against. There you go. Look, now it's pushing. Now I'd be out. That would be it now. I wouldn't be greedy. Take that.
Innovative companies in this space.
Nice push up and then rejection.
Well, I think his framework is reflective of.
You can see on the 5 minute, and we're getting towards that 3.8.
That growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income.
That's a nice reversal. We see perfect entry again, and you can either hold for one trade or do I do like three separate trades, take the money, re-enter. You know.
The income growth that the Kishida government needs to redistribute.
That's another nice winning trade. And now let's wait for the open. As you can see, it's approaching. Let's have a look at cable. Cable's just dipped below on the 5. Again, still not ideal. Still weary of cable at the moment, obviously. And we're only 14 pips back to the New York line. So let's see, it's the Asian line. So see if it uses this as a channel. It's going to bounce off that again. But again, we're not going to be entering a trade here until 45 minutes. And we've got the news. So there you go. We'll see. But that was a nice. It didn't break. I mean, it did touch the band. So again, you could have gone in maybe on this trade here. There'd have been some drawdown, but then you'd be in profit now and you could be out of the trade. Again, just 3 or 4 pips, but it's just not enough. 4 pips. You know, you don't want to be going crazy and using a big lot size on these kind of moves. So you want bigger moves, 10 pips plus on pound dollar. US30 is different. Oh, and it hit, there you go, look, so it hit the center line, hit our TP, so that was perfect. So like I say, if you were a holder, you'd have entered on that candle there, as we did, but I got some green and got out. And then you could have held for just below the centre line, so 25 pips there. Easy winner on US30 before the market.
They delivered in the last week. Guy Johnson joins us now from London. Guy, good to catch up, buddy, as always. What did he have
and
to
you can
say
see on the bigger for on the 5 minutes we're at 8382, so this is where we're seeing resistance and seeing the drop.
He is going to focus on the insurance sector.
Is it going to break? You have to wait and see.
He's going to allow UK insurers to invest longer term into infrastructure projects. And he's talked about the fact that we are going to see supply side reforms coming through. In some ways, that was what was missing from last week.
Clawback losses, that's what we want to see.
We certainly need
we're still at £178 dollar.
How that comes, how quickly that
There's your rejection. Everyone say why? Well, that's a moving average, and that's a Fibonacci, and you can see we're getting some movement now, and we're going to push up and break. We're going to our top side.
Down a little bit. I think there's an appreciation that we saw this situation evolving at a time of
you can see the level of support there.
An incredibly strong dollar, and I think that needs to be borne in mind. But it's a really difficult situation for the UK to manage, not only from the fiscal side, but also from the monetary side. Governor Bailey's slightly terse statement yesterday, probably, I think, now leading to an expectation that we don't see anything before November.
Guy, can we talk about that statement? Here's a quote from it. The bank is monitoring developments in financial markets very closely in light of the significant repricing of financial assets. What did that statement mean, Guy?
Wait and see. I think it's basically meant we're not going to do anything. I think there's a sense of frustration at the bank as to what is happening here. I think a lot of people have been caught on the hop as to just how big the market reaction has been. But the bank now faces a significant problem. The market has priced in much tighter policy. How does the bank now react? Does it deliver that tight policy? Are we going to have to wait until November for that tighter policy to be delivered? It is a significant step up that the Bank of England is going to have to deliver, plus 100 basis points or more could be required. It'll be interesting to see how the market reacts when that comes. Does this settle the situation down? But John, the UK is already dealing with tighter monetary policy. You look at what is happening in the mortgage market right now.
Yeah.
You look at what is being priced there. You look at the 3-year swap. The 3-year swap, interest rate swap, is now at 5%. Started the year at 1%. That's how you price mortgages in the UK. Anybody coming off a 2-year rate, anybody coming off a 5-year rate is going to be hit with that straight away.
Guy, you're just not offering new mortgages right now, are you? You're just waiting for this to settle down. Isn't that what we've basically seen from some of the banks in the last day or so?
Yeah, it'll take them a few days just to figure out what exactly they want to do. But it is a step change, John, in terms of the pricing that we're looking at here. A lot of people are going to be coming off 2-year fixes over the next year, and they're going to be facing a huge, huge step up. How do you reprice the UK housing market in that kind of scenario? We've been used to very low rates. They don't exist anymore.
Big struggle. Guy, looking forward to the coverage, the show, in about 42 minutes' time with Alex Steele. Deutsche Bank and George Saravelos wrote about this a little bit earlier today, and one question we've been asking repeatedly over the last couple of weeks, in fact, over the last month, whether what we're seeing play out or what we're about to see play out is a readjustment, just a normal readjustment. We talked with Luke Hickmore about it, of higher yield to weaker currency to attract capital to finance the deficit, or something like a self-fulfilling negative downward spiral. George Saravelos framed it as follows. Crucial question, his words. What is the clearing level of UK asset prices and gilt specifically? He went on to say, at which investors would be willing to fund the UK. The market is itself already attempting to answer a record low in the exchange rate, a near 2% rate hike by early November, and a 6% terminal rate from the Bank of England. If this is not delivered, it risks further currency weakening, further imported inflation, and further tightening. That's the vicious cycle that comes off the back of it. Luke Hickmore, I want to throw this at you. What would happen if the Bank of England does not validate current market pricing at its next meeting in early November?
It wouldn't be good. I think the currency would be well below 1. 30-year gilts would be banging into a 4.5, full 3/4 area very quickly, and we're looking at a lot of pain. But I suspect we're also not going to get validated at a 6% terminal rate. I think UK economy can probably live with a late 4, maybe early 5, but it really can't live with a 6% plus terminal rate. You were saying about mortgages, 300,000 people a month are coming off a fixed rate mortgage.
This is going to be really, really painful stuff for the United Kingdom. Judy Bill, you and I have spent a lot of time through the summer talking about how to hide from some of the economic weakness. How do you hide from what's happening in the FX market and the weakness that's developing abroad, not just in the UK? I'm thinking of Europe much more so, thinking of China as well.
Yeah, I mean, I think it's a pretty difficult, as much as it's a difficult economy in the U.S., when I look abroad, I'm pretty pleased that I'm a small and mid-cap investor in the U.S. So, I continue to focus on businesses that don't have a lot of that FX exposure, because that hits in a variety of ways, right? It's not just that the currency that you're bringing back is worth less, right? Your goods or services are less competitive. Your cash flow is
US30 saw rejecting off our moving average centre line. So some aggressive scalpers could have gone in on that. Just taken another
pretty positive, especially in the last week or so.
Nearly sold there.
Small and mid cap.
Number 10.
What do those companies look like? What do they do?
Now it's waiting for the open, forming a beautiful little W. Are we going to get a double bottom?
Raise the ire of regulators the way that a Facebook or Google do, because they are able to own and their own destiny within their own
Again, you can see here, but we're right on the support level 05. Look, so let's see if it breaks it. And remember, this candle's 1 minute 30. It's got to finish below.
A small little widget, right?
That's why it's dangerous to take a trade right now.
Very profitable. I think it's really important.
Even though RSI's just broke the level, it's all good. It's just still you want to wait.
They serve financial institutions. You can't tell that it went through a financial crisis if you look at its numbers. That's the type of business we want.
Is that how you're back testing them, Julie? You look back to that kind of period to see how they perform?
Yeah, absolutely, right? It feels very crude, right? Because there's a lot more going on right now. But honestly, it's probably the best metric I can gauge. And let's say I own businesses that didn't exist in that time period. They better have either a lot of recurring revenue that's profitable, not just regular recurring revenue, but it needs to also be something that's pretty mission critical, something that you're not just going to switch off the way that you're going to switch off your Netflix and your Hulu because you lost your job. Those are the types of businesses that I want, durable ones.
Luke Hickmore, I want to give you the final word, and it's on the global credit story. I've heard this a lot, that we're not going to get a massive default cycle, that we had all the stimulus after COVID, that the leverage isn't there in the way that it was anymore. Luke, has your mind changed somewhat as this year has progressed on that theme?
I'd like to say no, I really, really would, but it's changed in the last few days because I think what the broad yield market starts to price in is a much, much deeper recession than we've been expecting for 2023 and possibly bleeding into 2024. And if we get that, then I think we get ratings drift, where we get a large downgrade cycle.
There would have been a nice sell down to 618 now, so we're trapped in a bit of a zone here, but we're forming a kind of a double bottom, as you can see. Look, a nice wave pattern,
shut down over the last week, and if that continues for any length
which I
of time,
love to see these patterns when they form.
Coming in. So I'd say it's mildly moved towards more concern, but definitely not in the camp of it's all going to be really, really horrible next year.
So this means we could see a nice break on the open back to our top of our bands.
Brilliant as always.
Be a nice.
Santander temporarily pulling some UK mortgage products, according to Reuters this morning. Unsurprising given what we've seen in the last day or so. Up next, your morning calls, and later a conversation you do.
What is the main reason institutional investors give you for not adopting crypto?
There's still a lot of regulatory uncertainty. The U.S. has been not good
Again.
at making things clear. What's a security, what's not a security.
Do not want to miss. It's Mike Wilson and Morgan Stanley at the opening bell.
4 minutes to go, team. So everybody get ready. Let's see what we can get. Let's see, are we going to get some positivity? Are we going to get a W pattern? Are we going to get a second leg creeping through? And then we'll get ready for our final trades, which is going to be the consumer confidence and the new home sales. And we've got a Fed speech kicking off as well just before it that might mess things up, who knows. So it's great, exciting, you just don't know which way. But we know there's going to be a move and we want to get in on it. The market is just at support level in the 618 on our auto fib. And this is a good thing, the fib is automatically drawn for you, automatically resets, so, and is based on the 5 minutes, so you haven't got to be drawing fibs. All we're going to do is sit and waiting for the setups to come to us.
Faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
So durable goods was there.
Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces...
Counting down, 226. Good luck everybody. It's looking a good pattern. Let's hope we get it. Be nice to have a little buy. Confidence back in the market a little bit. Compared to the UK, US is doing way better. And that's the general consensus. Right, 2 minutes to go. Here we go, final countdown. Just going to remove that line now so we can see clearly price action.
Stocks bounce. Here are your morning calls. First up, Citigroup cutting McDonald's to 246, opening a negative catalyst watch on shares due to its outsized European exposure. Evercore upgrading higher.
1 minute, 25 seconds to go.
Expecting the company to benefit from easing travel restrictions. And finally, Goldman downgrading Keurig Dr Pepper, seeing a more balanced risk reward with consumers facing inflationary pressures. That stock is down by almost 2%. Coming up, Morgan Stanley's Mike Wilson saying stocks have yet to find a bottom. That conversation coming up next, your opening bell, just around the corner.
One minute to go. Make sure we're logged in again. Yeah, we're on the lowest lot size, 10 cents a pip. Let's see how many trades we can get away. Again, it's all about your broker executing trades, as many as we can get. Let's just see what we're going to do. Let's see which way. Are we going to get a push up to our centre line? We're going to break it. We're going to reach the top of our bands. 30 seconds to go. Nice rejection on the 1 minute. We're sat on a 618 support, so that looks good. But the trend bar, remember, is still bearish, and so is the RSI. So let's see. We're going lower. It's moving. 7 seconds, 10, 8 seconds. Here we go. Good luck, everybody. Get ready. And we're in. Let's see. It's going to extend the outside of them bands. Let's see. Brilliant. We've got some on the sell there. Perfect. Let's see. Going to push back. Just reject it on that 786 level. It's just got to push through on that 786.
That goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
Brilliant. We've got some more. Oh, we've got about $50, $60 on that one. That was great. Some nice moves on that. Nice sells. That was another easy one. Now obviously we're going to wait for the bounce. Just move that round.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on.
Now let's wait and see. 786 going lower. Still pushing. Let's just wait and see. We'll see it be back inside that bands for a buy. That's took us to 31% up.
Here's the bounce. We took out the June low, the closing low on the S&P. We bounced back by 1% on S&P 500 futures. On the NASDAQ, up by 1.4.
Is it going to push up?
Positive by 1.26%. The Upton Valley New York ring, switch on the board and get to the bond market. Equities at new lows for 2022. At yesterday's close, the 10-year at new highs. Highs we have not seen since 2010 on a 10-year.
Nice pushing up.
Come back down lower, -3 basis points.
Yes. We got $100 on that one. Beautiful, beautiful.
The euro just about showing some strength here. Will that stick? Euro dollar.
Broker closed me out in a couple of trades. Lost a $5 one. But we won another 10 back on that, so it's pretty good.
John, well, we do have a bit of a reprieve here for stocks for sure. We're looking at the best day for the S&P 500 at this early moment in about.
Let's see if that's going to complete that wick.
Outlining yields coming in, that's giving stocks, especially tech stocks, a bit of a reprieve. Apple up 1.3%, valuation a bit less of a concern. Oracle up 0.9%. We did have
Pulling back down, pushing up.
Long ago that they are the company, I should say, they're agreeing to pay $23 million to settle foreign corrupt practice charges. Not the first time, not a huge amount of money. In fact, a very small amount of money for
Is
them.
it going to push up?
Off of its highs, nonetheless, still higher, up 0.9%.
Finished beautifully inside the bands.
It is rallying in a big way, up 4.8%. This, of course, as we have Bitcoin and Ether and
Yes, another $10 on that. So we're now 35% up, and we're going to hit our centre bands. Another nice move. ADX was just in the right position. Look at that, perfect.
Up 1.6%. In fact, energy, the third best sector, most sectors, all sectors right now.
Well done to everybody. If you did that, 2 blocks of trades achieved.
Happy, thank you. The equity market, the S&P up by 1 full percentage point. Will this bounce stick? Because the bid in the bond market is fading just a little bit. The 10-year is now lower by just 3 basis points. The 30-year higher by 2 basis points. The long end of the UK, the gilt market, that yield is surging once again. The S&P, as I say, up by 1.1%. On the S&P 500, information technology there up by 1.65%. So we've got a big tech bounce for now at least, looking to avoid the longest losing streak since February 2021. Ed's back with us for more. Hey, Ed.
Yeah, morning, John. We're up 1.6% on the NASDAQ 100, snapping 5 straight days of losses, which was the worst run since February of this
So
year.
it's stretched out, double bottomed. You can see it's a stretched out W. Let's see if it breaks the center line. Beautiful, nice little open there, look.
Names like Nvidia, Amazon has seen gains in recent sessions, also seeing some of the EV makers climb higher as well. NASDAQ 100, of course, coming off its lowest level since June of this year. The S&P 500, if you just take recent performance, there is some outperformance on the NASDAQ, and some of those downtrodden names that were really hurt by yields. For me, this is a yield story, right? The chart says it all, that as we saw that
breaking
in real yield, the NASDAQ 100 suffer. Lo and behold, a pull back in yields, and whoa, off the NASDAQ 100 goes, and we're all a little bit happier.
Let's see if it sits on that 5 and pushes up higher.
This afternoon, when you do the tech show. Ed, looking forward to that, sir. Thank you. Just getting some comments from a few
Brilliant, and we're in and out. And we managed to get another 6, 12, 20, another $30 there. Brilliant, another $30. Closed out at 46 cents on one of them, then I got 8, 10, yeah, another, yeah, beautiful. That's a nice, as it crossed the bands, because we were green, we've got a gap between that and the A382. Now let's wait for the news. Beautiful, nice W pattern.
Let's talk about that earnings season really set the stage heading into this. It has been what has been almost a record-breaking end of an era. John, if you thought about coming into today, 13 straight days of yields rising on the 2-year yield. That reverses, so we'll say goodbye to at least to that record-breaking streak and see a boost a little bit here to equity.
That's took us to 37% for the day, so that's good. We're just going to hang on and go for this news now in 20 minutes, and then we're done. Look at that, what a W pattern. You just can't, just patterns like that, rare when they pop up, especially on a 1 minute time frame. You wouldn't see that on the 5, look. This is why we drop down and look, snipe our entries on the 1 minute. Look at the 5 for the bigger picture that's going on. Price push in. Beautiful. But I'm out and done. Don't want to risk any more. Got a buy signal now, look, flashing. The buy signal should be confirmed by the 1 minute, so that should be a nice buy. Rejection, but it's still going to push on up.
Kicking things off in a couple of weeks' time. 2 weeks on Friday, I believe. Taylor, thank you. Hugh Pill of the Bank of England making some headlines. The market moves, a challenge to the inflation goal. Guy Johnson back with us.
So that was, in the end, we managed to get away. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 20 trades and 3 losses. So the losses just came to about $12, and they were just the broker stopping me out or not executing my end of the trade. So 20 trades taken on open. Wait for the final news trades, and we're done. Look at that, beautiful. What a W pattern. How you just cannot get a better pattern than that to follow for a second leg. We get a buy signal as well. So we get a buy signal, we get the RSI, we get the second leg. We just still, the trend is overall to the downside if you're looking on bigger time frames, but We've scalped, we've got in, we've got green, we've got out, 20 trades, and now we'll wait and see for a pullback, but we'll wait for this news that's coming up.
Bank of England, from the ECB and again the Federal Reserve, and back in the US, Goldman.
See what Bloomberg is saying.
BlackRock telling investors to shun most stocks, pretty much everyone now. Wall Street.
Right, I'm just going to top my coffee up. Back in 2 minutes, and we'll finish off with the last trades of the day.
Create an untenable situation for risk assets that historically has ended in a financial or economic crisis, or both. Mike, I'm pleased to say, joined us right now. Mike, always fantastic to catch up with you, sir. There was a graphic that went with that quote, and I put that out on Twitter. It was Exhibit 3. It was the US dollar year-over-year change. And you guys pointed out that it's at a level that usually leads to financial and economic stress. And there's all these different peaks in that chart over the last few decades, Mike. And on each peak, there is a crisis, as you point out, but it's usually been met with Fed easing. Mike, is it going to be met with Fed easing this time around?
Well, thanks, John. It's always great to be with you. I probably should have used my PR agent. I would say, look, I mean, that chart is provocative. I mean, you know, that's what we do. But it's also informative. And I think there's three takeaways. Number one, the dollar is at a point now where it's causing real stress in the real economy, mostly outside the U.S. That's the way it usually works, right? The transmission mechanism is that, you know, as John Connolly said, former Treasury Secretary back in the 70s, it's our currency, it's your problem. And that's exactly what's happening. You know, EM has been terrible. Some of the other regions have had stress because of the stronger dollar, in addition to higher commodity prices, which is a double whammy. So that's, you know, one transmission channel. Number two, once it gets to this level, it doesn't stay there very long. You can see in that chart, it's almost a spike top every time. And then the third point, which is kind of interesting, those spikes are sometimes met with a low in equities and sometimes met with a high, like that's the beginning of the real decline. Given that we've been declining already this year, you know, it could be a little bit of both. I think we're into the final stages of this bear market. We've talked about this, I think, last week on your show. But that last stage, you know, can be fraught with a lot of risk for investors. And, you know, as you know, John, we're pretty disciplined around our framework, and we just don't see the fat pitch yet, specifically as it relates to S&P 500 equity risk premium. What I mean by that is, while rates have been priced into multiples, what's not been priced into multiples now is the earnings risk, which we're focused on. That can come in two ways. Either the earnings get cut or the equity risk premium blows out and the multiple goes down lower first. Now, as you guys have been saying on the show the last 10 minutes, I've been listening, I think you've got this right in the sense that, you know, whatever rates do in the short term can dictate equity prices in the short term as well. And so if we get a rally in the back end, which looks like it should happen from here, then, you know, stocks could get a little lift here into earnings season. It's kind of the opposite of the June quarter, where stocks sold off into the quarter and then rallied on kind of, you know, better than feared news. This time it might be the opposite. We may rally into the earnings season, and then the news is actually worse than feared because companies finally start talking about, you know, the risk from currency, the risk next year from a recession, and all those things kind of get priced quickly.
Well, we're going to get more rate hikes, that's for sure, including from the Bank of England. The chief economist speaking right now, Hugh Pill, saying that the fiscal news requires a significant policy response. That tees up a significant rate hike at their next meeting, their next scheduled meeting, November 3rd, if they wait that long. Mike, one thing you pointed out there was the growth story. I know the pushback, because you referenced the pushback in your recent research. The pushback is, how on earth can we get negative nominal earnings growth when we've still got high inflation? Mike, what do you say back?
Yeah, so we discussed this last week as well. This is the pushback we've gotten for the last 4 or 5 months. That that we live in a nominal world. Obviously, inflation is a big part of that, and so when you have nominal GDP that's still significantly positive, even if you have real GDP that's negative, which is the definition of a recession, you can still get positive earnings growth. And I agree with that in concept. Here's the problem with that rationale. Higher inflationary environments, one thing we know is that it leads to higher operating leverage. Okay, so when you have positive operating leverage, like coming out of the pandemic when they were stimulating, that leads to incredibly strong earnings growth. In other words, inflation inflates profits. The problem now, John, is that costs are increasing faster than end price point. And what that means is you're now into a negative operating leverage part of the cycle, and inflation will amplify that to the downside. And I think that's the one area we may be actually not bearish enough, quite frankly, which is that the negative operating leverage that we're about to experience, if our earnings model is correct, then our forecast may not be bearish enough on the earnings side. We'll have to wait and see how that plays out. We don't really have to go there yet because we're so far below the street, even on our base case on the earnings side, that we'll be able to adjust that lower. But that's one thing that we're watching carefully this earnings season.
So, Mike, just in terms of industry groups on the S&P 500, which industry group, which company, which set of companies is more vulnerable to that story you just told?
Well, you got to start very simply. You just say, let's just look at where the over-earning was the greatest, right? And that would be a lot of the consumer discretionary area, the consumer goods, where there was clear over-earning because there's no discounting going on. I think the technology sector is another vulnerable place because they also over-earned, and now their costs are a little bit out of control. There's more competition there too now because that's where a lot of the malinvestment happened because everybody put their money into new companies in tech. Maybe industrials, some of the commodity areas. I mean, we've noticed that a lot of these stocks are trading extremely cheaply, 2, 3, 4 times earnings. And the old adage, as you know, John, is you never want to buy a value stock or a cyclical stock when the multiple is low because it's telling you that the earnings are about to get smoked. So I think those are the areas, anything that's really economically sensitive, and of course, those areas where you over-earn the most.
Equities right now positive 1.5% on the S&P, on the NASDAQ up by close to 2%. I want to talk about this positive correlation, Mike, between equities and bonds, something you've talked about in the past and we should discuss now. When's that going to break, Mike? What's going to lead to a break in that positive correlation?
A recession, probably. I mean, that's usually the way it works. I mean, so far, treasuries have not acted as a safe haven because of the central bank's, dilemma to have to tighten into this slowdown. Normally, by now, the Fed would have paused. They probably, I don't know if they'd be cutting, maybe they would have paused, and that would have led to a sharp treasury bond rally as stocks potentially went down. Okay. So, that's probably the way this is going to end in our view. I mean, as we get later in the year or early next year, the Fed will pause. Eventually, they will pivot. We don't think it's right now, clearly, but they will pivot, and they will pivot because something has broken or we're in a recession or both. And that's kind of where we're driving towards that. I mean, the Fed could not be more explicit. That was the title of our note this week. They are being crystal clear that they are driving us into what they call, and I use their words, pain. Okay, so I wouldn't fight that. I mean, don't fight the Fed. It's a pretty good adage to pay attention to.
Hearing that from Bullard right now, the credibility of an inflation targeting regime, their inflation targeting regime, is at risk. The willingness to do more. Mike, at the start of the year, as the year progressed, you were the outlier. Now everyone's doing an impression of Mike Wilson. Mike, everyone's long cash. They're all bearish. I can pick out a few bulls, the likes of JP Morgan and some others. Mike, when do you start to lean?
Oh, we're back. Right, we've got 10 minutes to go until the final trades of the day.
Well, I mean, it is getting
so let's have a look where we are. US30 completed that perfect W pattern. I wonder if we're going to get an M now. If we're going to get a double top and then a drop.
Even though the sentiment and positioning was as bad as we've ever seen, the breadth was there too.
So let's see.
The fundamental backdrop did not support it, and what I mean by that is, we were staring down the barrel.
And we're literally looking at this consumer news in 10-12 minutes time,
as I mentioned earlier,
and then we are done.
Never price that. So we got to get the price right, or we have to get earnings lower in conjunction with this pervasive bearishness. Now that may mean, John, that we don't have to go down and hit those lower targets that I've talked about. Like we could just kind of.
Homes dues could be an important indicator of inflation, obviously. So this is why everyone's waiting for it.
Where are we going to trade to?
Just drop a line across there so we can see exactly where it's going to be. There we are.
To balance that, we think the risk reward here, even at 3,700, is better than it was at 4,000, obviously, but still not that attractive. It's probably 3-to-1 to the downside.
Mike, I wanted to fit this in. Just a final question, and forgive me for the crystal ball type stuff.
Bounce off the top of the Fibonacci, drop back. That's great.
Are you and the team giving thought to the future of things like passive investing, given the high weighting of growth stocks on the S&P that have benefited from a decade of zero interest rates and a ton of QE? The reason I ask this, Mike, is more recently I keep speaking to investors about whether we could see A lost decade for passive investors hugging the benchmark, the index, the S&P 500, waiting for a return to the old regime that just never comes around. Mike, are you having that conversation? What does it sound like?
Well, we've left Kansas, Toto, in that regard. I mean, I would say there's no doubt there was a regime shift, that was driven by this breakout in inflation. And, we've been looking to get inflation for 20 years. Of course, it's like the old ketchup bottle routine. You squeeze the bottle and then you get too much. And that's where we are now. And we're not putting that genie back in the bottle. So we're very much in the camp, as you know, that we're entering a period of fiscal policy dominance, no longer monetary policy dominance. Monetary policy can no longer be as accommodative as it has been historically because inflation is here to stay, but it's going to be volatile. And so the way we think about it, John, is I agree with the concept that perhaps, particularly in real terms, okay, inflation adjusted, stocks are going to have a hard time generating that much return in real terms over the next decade. However, there's going to be incredibly profitable periods to trade it, which is what we do. I mean, we are cycle analysts. Okay, that is our entire framework is based on that. We have a lot of confidence in it. We call it the boom bust. We think we're entering that, and so you can expect that we're going to get pretty bullish at some point when we feel like that next boom is within sight. And when I say within sight, it doesn't mean tomorrow. It can be 6 months out. It could be 12 months out, and that the bust has been priced. So that's how we're thinking about it. We try to be tactical, and we have a framework, and obviously we could be wrong about that, but that's generally our view. It's a boom bust environment, probably for the next 5-10 years. Inflation will oscillate back and forth. The Fed will deal with that, and the big lever is going to be fiscal. We're already seeing that, right, John? We're seeing it in the UK
Sure.
with the energy stuff. We're seeing it in the US. We just did two fiscal stimuli, right? We saw the IRA, and then of course we have the student debt forgiveness. Those are big programs in the face of we're trying to calm inflation down. So I think we just got to get used to that. It's going to be a much more volatile economic outcomes, which means equity risk premiums should be higher, not lower, and it's going to be probably a higher earnings growth period from point to point, but with a lot of volatility in between.
Well, the year's not over yet. We've still got 3 months and change to go. Mike Wilson, thank you, sir, of Morgan Stanley. Appreciate it, buddy, as always. Your equity market right now on the S&P up by a little more than 1% on the S&P 500. Tons of hawkish speak in the last 10 minutes or so. From the Bank of England and the chief economist, Hugh Pill, the fiscal news requires a significant policy response, to Jim Bullard of the St. Louis Fed, who said the credibility of inflation targeting in their regime is at risk. What more do you want? From New York, this is Bloomberg.
What is the main reason institutional investors give you for not adopting crypto?
There's still a lot of regulatory uncertainty. The U.S. has been not good at making things clear. What's a security, what's not a security.
Somebody says, I want to be a person has an impact on society, what would you recommend that somebody do to work their way up?
Well, I think the first thing you've got to believe in something that you really care about.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, your entire savings in just a couple of companies. So the mutual fund was created to give a diversified expert management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact,
So we've got 5 minutes to go. The Fed's going to speak in a minute as well, as you can see, counting down to that. So I just wonder if that's going to get in the way. But we'll see. We've got the Homes news here, and obviously we should be looking at going the direction of the news result. The higher than expected figure will be seen as a positive for the dollar, and lower if it's negative, of course, as always. So we'll see how the 30 reacts to this. Home sales are meant to be down like 100,000, as it says here, look. Month on month though, from -12 to -5. So actually month on month it's going up, year on year it's actually it's about the same. So it's still quite positive in the US, if this prediction is true. So let's see. As the Fed is speaking now.
We'll cover the latest trends in sports betting.
Final trades of the day. Like I say, we've had a good day. We're 37% up.
Plus expert insights from special guests. The Eagles got a gem on their hands. I hate to say it because they're in the NFC East with the Giants.
Odds are it'll be your favorite way to stay in the game.
Let's see if we can finish the day strong.
Saturdays only on Bloomberg.
I don't think they've been realistic about the pain that they're actually going to cause. If you look at their forecast last week, the unemployment rate climbs a little bit. It climbs up to 4.4%, and then inflation melts away. I don't think it's going to be quite so simple as that.
That was the former New York Fed President, Mr. Bill Dudley there, weighing in on Bloomberg Surveillance a little bit earlier. We're going to get a ton of Fed speak this week and a sprinkle of economic data. Taylor Riggs has more. Hey, Taylor.
John, and you're right with that big Bloomberg opinion column coming out saying that really the Fed is sort of underplaying or underestimating the pain that's really going to be coming when you think about this inflation targeting regime and then what happens on the economic side as well for that. So can we continue to out-hawk ourselves and we get all of this Fed speak coming up? You also did hear from Charlie Evans, of course, overnight as well, saying that 4.5% unemployment would be okay. That would be a good outcome. So again, a focus on inflation and a focus here on the world of economics. Take a look at real yields. We spoke with Subhadra Rajappa, SocGen, of course, yesterday, John, highlighting the rate of change in nominal yields, but the rate of change in real yields as we've really come off the depths of the lows of
just logging in again. Yeah, make sure we're on 10 cents a pip. Smallest lot size, that's all we do.
The tightening of the financial conditions that this chart.
If you're scalping on a 1 minute time frame, you've got to use the smallest lot size because you're going to do lots of trades and you just want the less risk. You don't want to be going for gold and trying to be a big lot size because it just goes against you one time and your account's gone. Boom. Simple.
Brutal, and everyone seems to love dollar cash.
And believe you me, I've done it plenty of times.
Just absolutely awesome. As always, Taylor Riggs. Looking forward to the close a little bit later. We're repricing the Bank of England once again. Hugh Pill, the chief economist of the Bank of England. The fiscal news requires a significant policy response. Guy Johnson and the team, they're going to pick up on that story in just a moment. Jim Bullard doing what Bullard does. He's sounding hawkish, saying the credibility of our inflation targeting regime is at risk. From New York City,
Counting down.
Thank you for choosing Bloomberg TV. This was the countdown to the open.
Thank you.
Here's Bloomberg.
Westrock Coffee is the largest provider of coffee, tea, and extracts to the restaurant, convenience store, and retailer community in the United States. We want to go overseas with our customers, so we chose to go public, and Wells Fargo is our partner.
We've got 1 minute 50 to go. I'm just going to take the line out of the way again so we can see. Let's see how many trades we can get away on this result. Like I say, consumer confidence, high expected figures, positive, blah blah blah, the usual kind of stuff. It's only medium impact, but it's 104. So is it higher predicted? So we could get a nice buy on all this as it's counting down, and we're just sat perfectly for the buys, kind of bottomish of the channel, bouncing off our 618 fib level. Trend bar still showing red again now, red, so we've got to be careful. It's because we're in the RSI's in the neutral zone.
Have you seen from the Kishida government
50 seconds to go. Good luck, everybody.
Doubling the amount of investments in so-called green technologies. I think we need more than
Let's
just
watch
announcements. We need real
final trades of the day.
very innovative startups and innovative companies.
Let's see how many we can get executed.
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have...
It'd be nice if it was all the same colour. Let's see.
And private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Access the financial world on demand. Hear from leading economists.
Dropping. Let's see. There we go. Green and green. It's better news. Let's see it dropping. Look at that for a sell-off. Consumer confidence. Can we get any trades away?
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell.
Let's see.
Drilling down on the numbers and
Waiting on a broker to execute the trades.
Weekdays on Bloomberg.
Yes! What a win! Beautiful, guys. Oh my god. What a win, what a win. It's quick. Let's clear everything out. We're done. Oh my lord. What a win. Well done, everybody. I hope you caught that. What a drop. That was just an amazing sell. Thank you, thank you. And this is why I love true scalping.
Mainly because of a human error that led.
That was just perfect. And the new homes news there just bombed that down. Consumer confidence was the opposite. Now let's have a look. Whew. I've got to add up. I tried just clicked as many times as I could there because I know with these high impact news events your broker just doesn't want to execute the trades. Just they do their best. So consumer confidence was 1032, so sorry, was 108, so all better than expected, and that drops the market. Why? Because that puts pressure on inflation, so the market sees it as a bad sign at the moment, where usually it would have been good. But look at that drop. Perfect. Consumer confidence was higher, means more spending, and hence higher inflation. That's why we sold. So it was perfect, and I've not even added up what I won there. I just clicked and saw green and got out. And how many trades did we actually clear in the end? On that, we were done in 45 seconds, and we got 30, 60, 90, 130, 150, 180, 210, 240, 270, 300, 360, $400 team in 45 seconds. Screw holding trades is what I say. When you get it right, that's what you can do. And that's all from smallest lot sizes. That's not Lambo lots. That's your smallest lot size on my broker. So you just got to catch the move, and that we rode that wave perfectly. So that's took us to, wow, 73% for the day on the account. 73%. We've nearly doubled the account. Oh, and most people are pissing around on 1%, 2%, and we've done 73%. It's not every day it's like this. This is not typical. This has been an extremely good day because the markets are so volatile that when there's a data release of anything at the moment, price is just flying in one direction. So yeah, that's 73% on my account. So that's amazing. So some beautiful trades. I'm just going to post them results into my trading group as well. Bagged. So that's true scalping. That's advantage. True scalping, it can go one way or the other. Like you say, you can blow your account or you can reap the rewards that most people only dream of attaining in a week or 2 weeks of trading. So we've done it in 45 seconds. There is a week's wage. So it can happen, and that's on a small lot size. You've just got to learn to follow our rules, how to trade the news events, how to trade the opens, how to scalp in normal situations outside of those events as well, using our setup that we've got at the moment. And this is one of a few setups that we've got, and this one's been really successful. And yeah, loving it, loving the results at the moment. We'll be back later on to trade the API crude oil news as well. So yeah, the higher consumer confidence drops the market. Whereas usually if we hadn't got high inflation, we would have been a buy. But because we've got high inflation, consumer confidence, like I say, means more people spending, people still buying homes. It means the inflation keeps tumbling over. So the markets react by dropping. That's me done. Thanks for joining me today. And we should be back tomorrow. And please support the channel, give us a like, subscribe, tell people about it, join our Instagram as well. And go to the website www.mohawkforex.com if you want to learn the art of true scalping that we've done today live on YouTube. And it's been a successful day. And just have a look at cable. Cable, as I predicted, yeah, well, it's kind of we're still waiting. Again, we're looking for a buy on cable. We want to get back to that NY line. We want to get back to that 107. We've dropped below. So we're looking for buys on cable, but until we get a decent signal, we're not going to be doing any trades on it. But yeah, looking for buys on cable when we get the setup. So just wait. We'll be looking at trying to get back to that, see if cable can get back to that 1.7 before it takes even more of a dip. It might not. 52 pips, just look for 10, but you want to see a buy signal, not a sell signal. And we want to see RSI green. So at the moment we're just selling off. As you can see, we're hitting the bottom of the fib. We're looking for a retracement on this. Wait to extend outside the bands, get back inside. As here, look. Here you can see there was a nice, came outside the bands, went back in, and there was a tasty buy there you could have got. We just want to wait for that same setup now back to the MY line, so keep watching that. But once again, thank you for joining me. I hope you enjoyed that. It was a good bit of fun. We made a bit of money, and like I say, my results are not typical. This is all for entertainment, but if you do want to learn the art of true scalping, you know, using fundamentals, market opens, then just hit us up on the website, and look forward to you joining the group. So until tomorrow, thanks again to everybody, and trade safe, and we'll see you on the next live stream. Take care.